I think we're going to go ahead and get things started here. As you guys know, people sort of trickle in here, but thanks for joining today's CrossCountry Mortgage Fireside Chat with your host, me, Chris, and DJ. So obviously, this is always intended to be, hey, what's everybody got on mind? Let's chit chat. And then a few minutes later, I'm the only one talking, and then 45 minutes later, I'm the only one talking. So feel free if anybody has any thoughts, any ideas. Feel free just to unmute and chat, or throw it in the conversation room, and Don or Chris will flag me to shut up for a second and switch topics. But usually I like to start off most of our little classes and little presentations just with kind of just to take a look at the market, the interest rates, that is. So Mortgage News Daily, you guys, if you've seen any of my presentations or any of our talks, you've seen this one usually referenced. This is the site where I kind of consider it the most impartial third party. When you see interest rates on here, these aren't ads. Granted, there's ads as you kind of get within here, but it does a nice job of just sort of giving kind of sampling kind of where rates are nationwide. Also, when you see interest rates advertised, or I should say advertised, you see a headline, interest rates drop to 6.7%. In almost all cases, that's the Freddie Mac survey of interest rates. And what you don't know, and is no longer even in the fine print, there's points with that rate. So it used to be, the fine print used to say, yeah, interest rate is 6.7%, and that is based on 1 point. Well, now when Freddie Mac does that survey, they don't ask if a buyer's paying points. They just ask what interest rate did they get on the 30-year fixed. So that's why sometimes the headline interest rates that you see are truly below market, and also they're usually for the previous week. So obviously, when I'm a salesperson, loan officer trying to convince a buyer, no, interest rates aren't as low as the headlines you're reading, that's really what's happening, and why things are skewed a little bit. So just a quick note on that. This one is typically intended to be quoted without any interest rate, or excuse me, without any points. So just jumping into 30-year fix, I think we typically kind of use that as sort of the benchmark. So 30-year fixed right now, about 6.875 nationwide. It's kind of your average, and oftentimes this is the close of business a day prior, and then kind of sometimes gets updated through the day. So just to give a sample of, well, Sean, how do you feel about a 6.875? I'd say we're pretty darn lucky. Obviously, if we look at the perspective of the past 6 months, it was just last October when we were at 8.4%. Actually, this little bar up here is intended in giving the 2-year high and low. So this shows 8.03. I think this is on a weekly average. So just over 8% is being the high water mark for the past 24 months, and 6.16 being the low. So hey, at least we're towards the bottom half, and certainly you would say that the trend is primarily in our favor. Maybe if you don't look at the last 30 days or so, but jump in. So this is 1 year where rates peaked out here. Yeah, again, it shows 8 point. Let me get rid of this. Actually, here's a good way to show an example. So this is the Mortgage News Daily kind of survey, which again topped out just over 8%. This is the Freddie Mac. So you see how that line is consistently lower than interest rates we're seeing here, is because that's factoring in points. So pretty wild that you see, oh, here 6.96 this day and 6.97. That's a 0.3% spread, because customers are paying points willingly, knowingly in most cases, I hope. But that's just to give you a little bit more color there. So generally speaking, if I'm talking to a customer, if they've been shopping during COVID, and again now, everybody's aware rates are double, or maybe they bought a house during COVID and rates are double. But if you look at the recent perspective, heck, over the last 6 months, we're still in a very good spot. Even if you go back over the last, if we say 11 months, we're still not in a bad position. If you go back to last April or May, I suppose. But anyway, just wanted to give you a little bit of color about where we're at. Now, big week this week. Inflation numbers come out tomorrow, right before our big family reunions recap meeting. I don't think we'll have a soapbox to speak on tomorrow, but we'll be up there with our little vendor table, and feel free to come in and ask what's going on with interest rates. But big day tomorrow. Got some more job numbers coming out. And then next week is the Federal Reserve Board meeting. There's going to be no adjustment. So they're not going to drop interest rates next week. That's a 99.9% essentially guarantee as it stands right now. And if you think about it, the Federal Reserve hasn't dropped interest rates, or I should say, they haven't moved interest rates in close to a year now, if I'm not mistaken. Yeah, DJ shaking his head, so it gives us the DJ head nod, is always reliable there. So right here, this is when we started to see a bunch of economic sort of indicators go, you know what? I think the Fed may drop interest rates finally here soon. And the Fed kind of came out right around here thinking we'll probably lower interest rates, the federal funds rate, that is, 3 times next year. Well, Wall Street sort of said, yeah, well, we think you're being conservative. I bet you're going to drop interest rates at least 5 and maybe even 8 times. So as Wall Street was kind of coming to terms and kind of deciding that, we saw interest rates drop 1.5% over this 2.5-month period, or just about 1.5%. Well, since then, we kind of, Wall Street's been sort of realizing, well, not so fast. Probably only going to drop it maybe 3 times, give or take, before the end of the year. And that's kind of what took some of the steam out of this, colossal, I would say a colossal drop, but a pretty significant drop over this short period. So federal funds rate, we don't expect to move next week. We don't expect it to move in May for the next meeting. The soonest is probably June, and might not even happen then. So that's what's taken some of the sort of wind out of our sails, but that's kind of where we sit right now. Day to day, if somebody were to say, hey, where do you see interest rates next couple of months? I'd say about here, and I wouldn't be surprised if we're back over 7% again very soon, just with as different economic sort of announcements or indicators are reported. You're going to see some ups and downs, but there's a good possibility there may be some more ups than down. But Chris or DJ, what do you guys think?
The last time they bumped rates, so they haven't done anything since they met July of 23. So
about 9 months. Okay.
Yeah.
Yeah, and they're talking the next rate cut they're considering that the market priced in the past week is either June or July. Yeah. I personally would put that at July until unless something drastic happens.
And if all of a sudden rates did drop, if rates dropped to 5.5%, realtors, feel free to chime in here. But what would you expect to see is from your buyers? I mean, I guess you think there'd be more buyer demand or less buyer demand? Do you think there'd be more listings or less listings? If interest rates drop to 5.5%, April 1st, you think that, I guess, would that be a good thing? Would that be a bad thing for buyers? I mean, obviously from a qualifying standpoint, but what do we think would happen to prices? Anybody have any thoughts?
Yeah, muted.
Brooks said mass hysteria for buyers.
Yeah, that's it. That's my feeling as well. So I think I had a feeling we all be on the same page. If rates drop, demand is going to go even higher. And I do think it would actually create a lot more listings, but proportionally, I think it's going to create more buyers. I said maybe motivate more buyers than it will sellers to list. So I think it would create more inventory, but I think it would create more demand and we would see prices go up. So if I have a buyer just blindly asking, hey, should I buy now or wait till the end of this year when I'm sure rates are going to go down, which of course nobody is sure. The conversation I might have is, hey, the reason to buy a house is not, to time it right with interest rates. You'll never do it. There's always going to be lower, or the day after, the day before is always going to be kind of throw off your math there. So the message I think certainly should be get the house you want at the price you can today, because if and when rates go down, that price is going to be higher. That $250,000 home is probably going to cost $275,000 if rates go to 5.5% or more. So that's the general message that we're saying. We still have our promo going where we'll waive our lending fees on a refinance, whether it's this year or next year for somebody who closes with CrossCountry Mortgage on a purchase. So we still have that. Definitely making buyers sort of at peace with taking things at where it's at right now for the market. So anyway, that's my 2 cents. I have a feeling most of you guys agree there, but again, feel free to chime in if anybody has any other comments. All right, I was going to jump into the next part here. Sorry about this. How Zoom, the top is always blocked out there. All right, well, I'm going to go back and forth here a little bit. All right, so I see it. I recognize most of the names on here. You guys wanted me to talk about an amortization schedule. Who enjoys that? I have a feeling Elliot probably would, but all right, let me just do this then.
Hey, Sean, just so everybody knows too, in the closing package of all the loan documents signed, a borrower does get an amortization schedule for the product.
And you'd be surprised. I'm talking to people with maybe not math degrees, but well educated who sometimes don't get the math of
PhDs.
Yeah, PhD. Yeah, Don and I had an interesting conversation this morning as well. So, I just want to kind of give the power of rate. So this is my little segue from interest rates, and then also get a bit into the amortization schedule. And just because I didn't see many hands raised when I asked the question about amortization schedule, I'll keep this kind of light. But so let's just take a nice easy $200,000 loan at a 7% interest rate. Again, I think most of you have probably seen this before, but if you've got a 1330 payment, that's his principal and interest, of course, no taxes and insurance, this is just kind of how it breaks out. And you'd be surprised how many buyers need this to be shown to them. And, obviously we all, for the most part, know how this is going to work. But as each month goes by, they're making that same payment. A little bit more goes towards principal, a little bit less towards interest. And on this 1330 mortgage, $200,000 mortgage, the buyer may ask, well, what's the interest over the life of the loan? And it is shocking to see the interest is so much more than just the principal repayment. So I do, right now where buyers are buying often at the top of their affordability, not many people are looking to make extra payments, but I do, our webpage has this as well, but a little prepayment calculator sure is nice. So in this one, let's just say this person paid, let's say rounded it up from $1,330 a month to just do an even $1,400. Not a big number, but paying an extra $70 a month from the get-go saves this person, what was that, $279? So $49,000 in interest, an extra $70. So, as a realtor, this isn't something you may, mention or, may not be a big part of your conversation, but you are an expert, and, mortgage, for better or for worse, ends up being falling under your umbrella as well. So really, if a conversation ever comes up, I had a conversation with a guy this morning. He bought a house 10% down in 2021, excuse me. House has gone up in value quite a bit. And the conversation we had this morning is, how do I get out of PMI? So I said, hey, if you've been 2 years in the house on time, primary residence, single family home, and you can show 25% equity, your PMI could go away. You got to go through customer service. You'll probably have to pay for an appraisal, but explain how that process worked. And it freed up about $110 a month. He said, oh, that'll be nice. And I said, one thing just to give some thought, if you're comfortable with this payment, you're not struggling with that, you could keep making the same payment, but instead of paying PMI, paying it towards your principal and interest, or excuse me, towards your principal. And, I didn't pull out this calculator, but that was a powerful little, oh, you know what? I never thought of that. Why wouldn't we, was his words. And oh, by the way, whenever he lists that house, if it's in 5 years from now, the same math works in, and the amount of savings is still considerable. So anyway, there's certainly an argument where my financial planner would say, no, don't take that $70 and just pay it towards the principal. Put it in an investment and let that money work for you elsewhere. And there's certainly an argument for that. Call me old fashioned, but I always like the idea of getting rid of my mortgage sooner than 30 years. But this is, just wanted to show you the power of that prepayment. Also, the other conversation oftentimes we have, you've heard, if rates go down 1%, that oftentimes raises their qualifications 10%. So just to show you, on this $200,000 loan, rates would go from 7% down to 6%, drops their payment from $1,330 to $1,200. So that what we mean by that is that, yeah, now their payment goes to 1220. Let's see. So 13, sorry, that other payment was 1330, wasn't it? 222. Oh, no. So that buyer who had a $200,000 loan at 7% can now go to 222 at 6% and still have the same mortgage payment. So that's when you've heard that math. Rates go down 1%, the qualifications go up 10%. In this case, let's assume the buyer's maximum qualification was $1,330 a month. That's how we do this. Now, some buyers are just going to get dizzy when we start getting into these numbers and such. Some of them don't care, or frankly don't want to know kind of how the sausage is made and how these numbers look. But this is something we, Chris, DJ, myself, have on hand and frankly love. When someone calls from Lincoln and they're 2 years out of their college degree in engineering, those are the people, when I send this over, they're just like falling all over themselves. Hey, can I call you back at 8 o'clock tonight? We can talk about this. And oftentimes we do, but this is some good information. So anyway, I think kind of a sense you guys probably have a better feel on this than most others, but any thoughts or comments or questions on that? No. And sometimes our webpage has a lot of tools like this, but I'll sometimes send the spreadsheet right to somebody who I know is going to kind of eat it up. On our webpage, we revamp this, like everybody else, every couple of months. But there's some really good detail in here. This little blurb is from one of our blogs, which, by the way, feel free to, if you see something in here, whether it's a blog or, if you go through our social media, there's plenty of any blog that we have usually is referenced at some point in our social media. So if you're not already, I would definitely encourage you to follow us. Feel free to repost it. But even I had one team where they called and said, hey, we're doing a little talk on it was PMI, whatever. So I just, said, hey, is there anything you can, provide, or can you proofread this and have us change it? And I said, well, let's do this the other way. Here's a blog where you can pretty much pull what you want. Yeah, we'd love it if you referenced it or provided a link, but all the detail is right there for you. So the Resource Center has a little bit of everything. You'd be surprised, I think more so now than in the past, how many buyers kind of go here on their own. But running a mortgage scenario, I like when buyers contact me to run through, hey, I'm about to put an offer on a house. I want you to run a payment. I can send them to this webpage, but I do like sort of being in on it. Number one, to make sure that they're using a current interest rate. Interest rates last week and today might be different. I don't like to rely on the realtor.com, the Zillow, or sometimes even the MLS listing for property taxes. I like to go to the county webpage. Homeowners insurance is a variable that buyers often forget. And of course, in talking with them, I know they're shopping. I know that they're buying within their qualifying range. So I like to sort of stay in the loop on all these. So just an example of something we had in here, $250 sale price, putting $10,000 down. Buyer manually puts in the taxes. Buyer manually puts in the homeowner's insurance, or HOA dues, I'm sorry, and kind of defaults the insurance, but then the property taxes. And I really, really, really try to hammer home to a buyer. I don't try not to make them nervous about taxes, but just aware that, hey, if you're sensitive to that payment, or if you're buying at your tippy top on the qualification sort of range, you got to know those taxes. You got to watch those taxes because they will, as I'm talking to somebody for the first time, the first questions asked, what type of property are you looking at? You're looking at a condo, single family, duplex, and what part of town or what communities are you shopping in? Because if they say, oh, I'm thinking about, Auburn, or I'm thinking about University Heights, I got two huge tax differences there, and they might qualify for 300 at one neighborhood and 260 on the other, just because of the property taxes being a variable within. And oh, by the way, this link also shows annual interest being paid, which is when you click on it this way, it gets a little scary, but annual principal being paid. So nice little chart that, again, some people find helpful. Any thoughts or questions? Okay. Another one while we're here, we just go to loan types. Okay. So this, we had a conversation and I'll probably mention the next Tuesday meeting. So the famous philosopher Rapaski has been known to utter the words, "The riches are in the niches," and I so wish I would have come up with that, but that is so true. As I look at Wendy, I don't. For those who you don't even have to know Wendy that well, but I think we all know her niche. Investors, that is a huge niche, and I would tell any agent, whether you've been doing this for a while or you're new to it, carve out a niche. It doesn't have to be the only source of business, but having something like that can be huge. I mean, the example I like to give, Dixie Tuzlin, who some of you may know from, she used to be the productivity coach for The Office. She's not a veteran, but her boyfriend or husband, I forgot, was, and every Friday of all the buyers I worked with hers, almost all of them came from either the Eagles Club or the
VFW.
VA. What was it called?
The VFW, right?
VFW. Thank you.
Yep.
Forgot the acronym. Sort of the world's worst, excuse me, the world's cheapest beers outside of a college campus. And she ended up, I should say ended up, but she had done tons of VA loans just because she's sitting having in a social setting with plenty of other veterans. They probably know her as, hey, so-and-so's wife over there who happens to be a realtor. And I think I don't say unknowingly, maybe she did intentionally, but that's where a lot of my buyers that were referred from Dixie were basically organically through there. So I don't think she ever intended on that being her niche, but ended up being that. So I would certainly say, even if you're working with a veteran and do your first VA loan, goes through Sean, Chris, or Don in a smooth transaction, as always. King of Wood over here. I would sort of say, hey, who do you know? I mean, VA loans are phenomenal. 0 down, no PMI, unbelievably great interest rate, flexible on credit. Well, they'll lend. You can sometimes get a VA loan, borrow more via VA than FHA, conventional. So really, really just know those niches. And you may not think of it as a niche, but it can certainly easily become a specialty of yours. USDA. So USDA is another 0 down government insured loan. It's like FHA, except it's less down. It's like FHA, except lower PMI, almost no PMI. You don't have to be a first-time home buyer, just like FHA. Now, there are income limits, but I don't say they're not flexible, but I had somebody who was just over give you a quick USDA story. Buyer was just under the income threshold. We say, hey, yeah, just send us one more pay stub because we have to verify your employment one more time before. They send us a pay stub and there's a $3,000 bonus. The guy went and got a bonus at work, and now we make too much money for this program 10 days before closing. We got lucky. We went back, looked at the application. He had a 1-year-old child. The 1-year-old child has daycare, $750 a month. We're allowed to reduce the buyer's not qualifying income, but from the ceiling, we're able to take $9,000 and take it off of the income for this limiting purpose, and they qualified for the program. So thank God for that 1-year-old. And I mean, we were having conversations like, can he call HR? Can he give back a bonus? Can they take it from him? Can they reduce his income for the next 12? It was, crazy off the wall conversations that he was asking. And thankfully, we had the option all along just to go ahead and plug in the child.
On that one too, Sean, in the USDA, 6% seller concessions as well.
Yeah, I've had buyers get in, literally no money out of pocket, getting a refund on their earnest money and or appraisal fee. So it is a phenomenal program. And I am seeing, I know the market's still tough, but I am seeing seller concessions come through a bit more these days. So for what that's worth, don't automatically assume the seller's not going to consider it. Likewise with any government, VA, FHA, USDA type loan. So any questions on those two products off the top of your head? No. Okay. We still, I know on the last couple of Firesides, we talked heavily about our Smart Start program, which is a 2% grant up to $4,000. There's the Community Promise, which has been a home run, $6,500 grant. Remember, that one has no income limit, but it's based on where you currently live. We've got some really big success stories. I mean, where buyers are getting in with next to nothing out of pocket. I think I mentioned, if you were on the Fireside chat before, taking that $6,500, instead of using it towards the down payment or closing costs, use it towards points. Had a guy buy down his interest rates to 5.7%. He won't be calling me for a refinance for a long, long time. So that one felt pretty good. Renovation loans. Someone mentioned maybe doing a Fireside or a whole class just on the renovation loans. Those are tough because the closing time on those, you're not going to get those done in 3 or 4 weeks. They're averaging 60 days plus. In this market, that's a little, that might be a little bit of a reach. But when you have got that absolute clunker fixer upper, it's been on the market for a while, it's going to be cash or renovation only. We've got a program for it. Worked with a buyer who was his landlord offered to buy his house, or excuse me, to sell him his house. He said, I don't want this dump. So he got pre-approved from me, shopped for 6 months to buy a house. I think you see where this is going. He said, you know what? Maybe this dump isn't so bad, but how am I going to fix it up? Worked it out with the landlord, had the seller pay the closing cost. Buyer came up with 3% down, conventional. I don't even remember what all the work was, but rolled in about $25,000, and that dump is now his first house. And what better? He's been test driving that house for 3 years, and he's living happily ever after. I think it was $110,000, $120,000 house, and he knew, he'd been out in the market for 6 months. He knew it wasn't going to compare to anything else out there, so worked out great for him. So anyway, just wanted to make sure we talked about that. The Bye PMI, that's our 15% no PMI program. That's a home run as well. Where I think when it originally came out, where I really thought this had a value is somebody putting 20% down, and then they put in, I'm going to do an appraisal gap up to $15,000. It comes in short. Well, either the buyer had to come up with more money, or now they had to pay PMI. Well, with this, now you got 5% coverage in there, no bump to the interest rate, no PMI. We've used it a few times for that reason, but just generally somebody thinking, 20% is the norm. Hey, PMI is not that bad, but I can give you 15% for the same interest rate. Oh, great. That'll help me, put a little money into the house. So absolutely, really killing it with that program. So side note here, my little picture here, not to tease you for the next Fireside chat, but I did get new headshots yesterday or last week for the first time in 7 years. So you might see, feel free to check our webpage in the coming weeks. You might see an updated picture. I asked, oh my God, I forgot our guy here, but he may or may not airbrush out the gray here. So we'll see what happens. But
yeah, he has so much gray, Sean.
Yeah, just to give you guys a little cliffhanger, leave you guys wanting more. I just want to give you a heads up on what's to come here this spring. So, Chris or Don, any other programs you guys wanted to touch on here?
No, I guess the only thing that we say is CrossCountry Mortgage. We pretty much do everything, every possible loan out there, including bridge loans, except for raw land. We don't lend on lot loans. Now, you could buy a lot and build it into a construction loan that we offer, but we don't have a true lot loan. It's about the only product we don't offer, right?
Yep, you're right. I've got 2 good resources outside. Yeah. So, if you got, as oftentimes, we want to be your finance arm, so to speak. So, if it's not our buyer, if it's another lender, more than happy to throw our 2 cents in if there's a problem, trying to work it out. If it's something we can't do, happy to refer it. We just want, we want you to have a happy customer and a closed deal once all is said and done. Yeah, we'd love to be the one who assists on the financing of it, but even if we're not the ones getting paid in the end, more than happy to do that to be your partner. So a question, I had a sit down with a new agent the other day, and it was asking me like right out of the manual, good questions. Like, okay, well, I think I like you and I would love to work with you, but how do I refer you business? It just sort of almost threw me off. But so just to talk through a couple of things here, because I'm kind of taking this conversation where that one led. I always say, and Chris and Don, you may have a different tact as well, but I always say, hey, if the customer is ready and willing to take a phone call, I'd love an email and a phone number. If you're not sure, the buyer, don't want to be sort of too presumptive or too pushy, feel free to have them call me. Or what I oftentimes suggest is a little group email. If Wendy refers, Tom and Susie to Sean via email, all three of us are on that email. Wendy and the buyers can see I replied back, within minutes. And Wendy knows, well, I should say the buyers know that Wendy knows that Sean reached out to them and the ball is now in their court. So it puts a little bit of accountability out to them, because Wendy probably said, well, we can't look at house, so we can't really, take things to the next step until you get pre-approved. So it kind of puts a nice line in order there. My typical thing is, as soon as, if someone gives me a window of time to call, I'm going to call then. If they just say, hey, you reach out to this person when you can, it's going to be same day. And I'll usually reach out, 3 times. And you'll know it if they're not hearing from us, or from me at least. So that's kind of the normal process, and typically what I suggest, but everyone's a little bit different. What I tell all agents, but this one being pretty new, doesn't have a mortgage themselves, so very, very green. I said, being that you may not have been pre-approved yourself, if you've got somebody you're comfortable with, especially if it's a friend or a family member who kind of, likes you being part of it, feel free to be on that conference call, or come in the office when we meet, or do a Zoom, be on that Zoom, just to kind of hear, I guess from 2 different perspectives. Number one, the dialogue that we as a lender ask, but also part 2, there's stuff that'll be uncovered in that conversation, not just, well, how much do you qualify for, but, what's your payment? What are you comfortable with? Are we going to need to sell or paying closing costs, things like that. So if that's something you want to be a part of, absolutely encourage it. And I don't think there's much downside. Obviously, the buyer has to be comfortable with you hearing their private information. So there's definitely, you may not be comfortable with that, but something I do often offer. Another question that came up is saying, the realtor asking me, well, should I give 3 names in terms of a lender? I was like, I told her, no, you should give at least 10. That's probably the best way to do it. I didn't say that, but I kind of, and this is an age-old question. Do you have to give 3 people? As far as I know, no, it's not absolutely required whatsoever. And the kind of the example I gave back is, I gave her 2 examples. One to be kind of funny, and said, well, hey, if I have, if someone lands on my webpage, clicks on an ad, and I get their information and find out they want to buy a house, in Brecksville, and they're not working with a realtor, well, I'd love nothing more than to refer that to an agent that I work with, right? So I asked her, I said, how would, let's say my realtor's name was Susie. I said, now, Susie, if I said, hey, I'm going to refer to this buyer, I'm going to give you Susie's name, Tom's name, and Bill's name. All 3 of them are great realtors. I'm giving them just a list of, hey, there's probably some good people on here, but it's not real personal, and there's not much of a testimonial there. Whereas if I said, hey, Susie, or hey, buyer, I think you should call Susie. She knows the Brecksville market great. Her specialty is in first-time home buyer. Whatever characteristics that I think are great for this match, I'm 100% going to expand on that. I'm not going to spend 10 minutes, but I think, very likely the same as well. If you're referring Don, Chris, or Sean, as opposed to, hey, give this guy a call, he's a loan officer in our office, they might and happily take that. But as opposed to, hey, I'm going to give you Chris's information. Chris, I've worked with Chris for the last 3 years. He's worked with many of my buyers. I'll get rave reviews. So explain the process, make sure you're comfortable. You don't have to get your loan from him, but it's a good place to start. Something as soft as that is a good way to go. Another example is, I'm guessing Wendy knows many, many contractors. If I said, hey, Wendy, I'm having a bathroom remodel and need a plumber. If Wendy were to say, hey, call one of these 3 companies, okay, yeah, I probably can't go wrong. But if she says, call my buddy Tom Smith at, Tom's Plumbing Service, I'm going to call that number. I'm probably not going to wonder, is Tom expensive? Is Tom cheap? Am I going to call 2 other plumbers and try and get him timing out there? So that personal, not to say I don't want to be one of 3, but, that question was posed last week. I said, maybe that'd be good fodder for a fireside chat. So anyway, just something I wanted to throw out there. Chris, you have anything to mention?
No, you summed it all up there, I think. Wanted to mention back to portfolio loans a little bit, just because a lot of people don't realize with a portfolio program or number of portfolio programs like we have, it's not like Fannie Mae and Freddie Mac where it's cut and dry. You either qualify or you don't. There is a bit of wiggle room there where we can get what CrossCountry calls exceptions to some rules. Um, I've been kind of throwing it out there as like it could be your save the day program. So if someone's being denied by a lender, um, whether it's us or anyone else, not denied or saying, hey, we're going to need to work on things. Um, it's not going to work for a conventional loan. Hey, maybe it'll work for this portfolio loan. So keep that in mind. We can definitely work the system a little bit.
Yeah, some things that fall into that sort of channel, DSCR loans, which you may not think as a kind of a last resort, but oftentimes it's a first, but it can be, non-warrantable condos, things like that. I can't remember if we mentioned on one of these calls, or obviously maybe not everyone was on there, but the 1099 program.
Mhm.
So this is where, you've got somebody, let's just say you have a realtor who has a 1099 for $100,000. And after their accountant's done, doing the taxes, it comes out to be $50,000. Well, when they go buy a house, there might be a little bit up and down, but we generally think, okay, you told the IRS you made 50,000. That's about what we're going to use for your qualifications. Well, if that limits you too much, well, you're going to have a lower ceiling on what you're able to buy. The 1099 program says, hey, that $100,000, we're going to count 90% of that. No questions asked. We're not going to look at your tax return. We're going to count your income as $90,000 a year and use that to qualify you. So that will obviously qualify them for a higher purchase than 50,000. There's a little bit of a trade-off. You're not going to get by with 3 or 5% down. The down payment's going to be a little bit higher, and then the interest rate will be a little bit higher as well. Now, we're not going from high sixes to high nines or eights or anything like that. But you're going to be looking at a higher interest rate, maybe more in the high sevens. So there is a premium to be paid for that, but it is a great outlet. You have a customer who, may go from not being able to buy a house to being able to buy a house. And we're sensitive to the fact that, we're not going to put somebody into something that they're not going to qualify for. There's a little bit of checks and balances. There's a good hard look at credit as well. We look at things like, hey, have they been making rent payments or other mortgage payments similar to this? Is their payment quadrupling by getting them then into this new loan? So these are all different things to look at. But yeah, that's portfolio non-QM. They're very similar, and it's similar depending on the lender you talk to. But those are some of the terms you'll hear out there. So that was a good ad, Chris. Yeah. Yeah, anything else? Any questions on the programs? But yeah, to bring that back, I kind of said, you may not necessarily want a niche for the 1099 only customer, but my accountant refers me, it seems like I get a cycle of the same 3 buyers. The first time home buyer who might be getting a tax refund and might be getting in the market for a house. Probably most ones I talk to, because he also does financial planning, downsizing. So somebody who's did a pre-approval last week for somebody who's retiring May 1st. So big life transition in terms of income, also downsizing. So we're able to do that. And then the third one is that self-employed buyer who's talked to 1 or 2 loan officers, doesn't really have a good firm understanding of where they're at, or maybe thinks they can't, or may have been told they can't buy. I like to say, hey, I don't have any kind of certification in self-employed buyers, but I've been doing it for 25 years, and I'm not afraid, love to tackle tax returns. What I would just say is sometimes we can still do them same day. Sometimes we need a few more days and some back and forth with some accountants or underwriting. But we'll give it every moment we can to give it a good hard look and see what can be made of it. So. Yeah. So yeah, that's really, those are the main things I had on our list for the presentation today. Does anybody have any comments or questions on any of these, or something else they want us to add on today? Chris, anything you want to add for the week?
I wrote down 3 headline things, reading the news and kind of taking some points away, but like millennial homeownership is up. Did you see that that hit in January? It was just over 50% of the purchases in the market were millennials. I thought that was interesting. I don't have much of an analysis beyond that. That might be a one-off, but it is certainly interesting because normally, historically, over the last several years, boomers have been dominating the purchase market.
And especially the mortgage side too. You know, if you look at cash purchases, that definitely is favoring more the top end. And you know, the State of the Union, there was a talk of a new first-time homebuyer credit. So you're going to see even more first-time homebuyers try and get to the market, as difficult as it may be, but there might be some little add-ons. So that was a good pull there, Chris.
Construction starts too. I watch those a lot because I think the easiest fix to inventory problems is new homes, right? Construction starts are picking up, but they're not like near where they probably should be. I would love to see some kind of address from the government, you know, in some way for maybe builder subsidies or something to kind of promote more new construction.
Well put.
Those were my notes.
Yeah, the fix that during COVID that we'll call it the Bullock-Hadley-Jarecki fix to the market was never employed, and that was giving a temporary forgiveness of capital gains for investment property for investors who sell house between around the medium income or something like that. So that ship sailed, but I don't know. The three of us will put our heads together to see if there's another way we could fix the housing market besides just good loans at decent interest rates. So we'll put our heads together on the next Fireside chat. So well, for the week we got we'll be at the family reunion recap tomorrow. That should be, as always, is phenomenal. So we'll see you there. Then next month we're doing a joint class with Ohio Real Title. It's going to be kind of a collaborative between the two of us, or between the CrossCountry, Ohio Real Title, just on ways to, I guess, this smooth transaction and where a good lender, a good title company come into play, as well as the benefits when they know each other. So I'll give you kind of some of my analogies on that down the road. But between that and the possible updated photo, I mean, maybe a boom to the housing market indirectly tied to those, but I'm all in for it. But, yeah. Anything else anybody has for the week? Chris, anything?
I think I'm good.
All right, cool. All right, well, I think we'll see most of you tomorrow, hopefully. And if you need anything, you know where to find us.
Thanks, everybody.
All right. See you guys. Bye.